everyone, welcome to the Stock Market Morning Prep video for Wednesday, July 23rd. Well, markets put in a little green day. We were up about a half of 1% to close to three-quarters of 1% in the NASDAQ. Very little movement, but just enough to make new intraday highs in the S&P 500. We are now at 1983.50, and this is exactly what we've been talking about. Markets come into the day, we have a gap up, they move for about 20 minutes and they stay stagnant pretty much most of the day, but just enough to continually making new intraday highs and new highs for that matter. Russell 2000 actually did manage to eke out a gain, but does that mean the selling is over in the Russell 2000? That's going to be the big question in the IWM, which is the ETF for the Russell, and that has to be watched closely. I've been mentioning that for several weeks now. Remember, speaking of the Russell, we had big divergence March and April, and Russell played catch-up. Is that going to happen this time? I'm not sure. I wish I had something more concrete for you, but unfortunately, the markets are extremely manipulated, and coming into summer months now, we're in the middle of July, the dog days of summer, we have absolutely no volume. I could not believe the fact that yesterday's volume was so slow. The markets were so slow, almost not moving at all at one point. I actually thought that my screen, something was wrong with my computer. That's how slow it was. Okay, it continues to be a stock picker's market. I continue to like the energy sector. In front of you is a continued contract of crude oil, light sweet crude for September. And I've got a few emails. Why do you like energy so much? Well, first of all, not just because of the geopolitical uncertainty that we have out there, that one day we can really start taking off. But if you looked at the pattern and you take a high to low, low to high, fib, and you see where we are here, we had a nice move up, making higher highs and higher lows, and then we sold off for 8-9 days, and now we've broken out of this bearish symmetry, creating this little flag pattern or pennant, if you will. So I do like this, and I like it better actually above 103.5, 104. That would clear all of this congestion here. But it's nice that it's just basing here, and I do think that crude oil would break out and eventually tag that 109.88, that 1272 extension here, and that's going to be my target in the short term. Now, if we take out the longer term, if we take out 110, the next target would be 112.88, probably right around 115 area, and then we would reevaluate it. But this is not for the faint of heart, not for small accounts. You do not want to trade USO. That would be the ETF for it. It would be the next best thing. Only because that it is volatile. Obviously, when things start to subside, whatever little war premium you have in crude oil will start to roll over like it did here. Okay, so just wanted you to be aware of the risk factors involved when you're trading crude oil. I do like the oil stocks. I like Schlumberger. I like EOG. I like Halliburton, HAL. But I want you to keep in mind one thing. Sanctions that are coming with Russia, they're going to hurt some American American companies, and Schlumberger, I believe, is poised to be one of the better companies because they're really, even though they're based in Texas, they're really a French company. So if at all, Schlumberger is really going to be poised to really do very well. So they came out with some earnings last week and kind of put pressure on the stock a little bit, trading around 113.5, 114. But I do like this stock, Schlumberger, as one of the better oil plays for a Russia play, for a sanction play. And this is just really nice here. You could see that we have lower volume on this pullback down. We did break the 20. I'd like to see price get above 120. Actually, this market at 114.73 would be ideal. And then I think we would actually start challenging the highs, if not go higher. Okay, so keep an eye on this Schlumberger. Once it just wakes up, it's like a beast, and this thing will just continue to move higher again. So that's one of my better plays for energy. The housing data came out pretty good, and some of the builders actually rallied on that. Never really gave a pullback. So I'm watching the builders. Watch the lumber and the ITG. That's another one that I do like. It's another one of my plays. All right, so now let's go into some of the sector charts here. Excuse me. Now, I've been mentioning IWM, spot yen, and of course bonds. Those are going to be the three asset classes that I want you to keep an eye on to figure out, or at least get an idea if we might have a local top in place. Um, right now, they're not saying much of anything, but however, they are holding true to support. And this is interesting because once we take this 200 out, which we haven't taken out in a long time, I think you're going to see some major downside pressure. Um, Once you get this to move, it trends, right? And it hasn't really trended, right? Except just kind of chop around, create this big ascending triangle. Now that we're sitting above a Fibonacci cluster of support, which was resistance, I think you're going to see bigger prices to come here. And I think that the first area is going to be this 200 and, of course, here. And if it takes up to 200, you're going to get to the next cluster, which will come right into play here, right around this area, okay? Next is bonds, right? We made new all-time highs in the S&P. Why haven't the bonds sold off? Well, number one, I think it's in the short squeeze. I think bonds have now market participants that are short bonds are now starting to cover. And I do think bonds in the longer term are going to start rolling over. I mean, because really the place to be is equities and certain commodities if you really want yield. But I do think that the bond play is going to be to the upside. And I think the next spot is going to be 140.26. Do you buy bonds up here? No. I mean, that would be the TLT. Quite stretched. I'd like to see one or 2 days like this, big move lower, and that's when you want to buy it. A big move lower like that is when you want to pick up bonds right around the 20. You don't want to buy it right up in here where you have this elevation. Eventually, bonds revert back to the mean, like any other currency or stock or commodity play, and then eventually would continue to move higher again. So wait for a pullback if you're looking to buy bonds or the TLT. But this is another big caution of mine. And rightfully so it should be. And that's why I'm holding stocks right now is not the right thing to do. I do see a bigger move coming in the next several weeks. I think before you get out of the summer, you're going to see at least a big move for 2 or 3 days. And then you can start nibbling along again. I don't see it happening here as far as holding long positions. All right, so let's take a look at the ES again, 1980.50, new all-time highs. We're up now 3 1/4 again, and it wants to get to the 1990. We're only literally 12, 13 points away. Why not? Let it get up there, let it push up higher, and see where it goes. I think the 1990, the 2000 area, that milestone mark is gonna take hold in the next several days. Between this week and next week, I think you're gonna see it, and then I think the markets will be very iffy. And the reason why is we're so close to it; it's like a magnet; it's gonna push it there. But remember, stocks really aren't moving. Of course, there are select a few high beta names that do move, and if you play them, fantastic. If you don't, you're out of luck, and you're looking for plays in your watch list, and it is very quiet. It really is quiet. Don't push it either. That's another thing. All right, diamonds. Big bearish rising wedge. Within the wedge, we have an uptrend, obviously, and it's only bearish if you break the slower trend line on a closing basis. So diamonds, which is one of the followers, just kind of trekking along here. Transports, obviously making new highs, and this is going to be the spot. 152 is going to be the spot here. If we can get back up to that 152 mark, I think that's going to that should cap this move at least in the short term. And once you make new highs, as I mentioned before, we sell off. Make new highs, we sell off. And if you see this on the way up, you'll see here we made new highs from previous, sold off. Made new highs, sold off. Made new highs, sold off. Made new highs, sold off. Same thing. So I watch that area. Once it hits, the transport should come off. And then here's this really IWM. What makes me nervous now? To me, this is just a bear flag here. This is just nothing more than a bear flag on low volume, trekking back up here. The area to watch is going to be that 111.89, that 200 EMA. Once that breaks, you're going to test this low of 107, and then we'll see what happens. But watch that IWM intraday. It's very important. And last is going to be the Qs. Qs did well. Apple reported earnings, and they did well. So I think Qs will continue to make new highs, helping Apple. And, of course, we had some of the higher beta names that reported as well. So as you can see here with the Qs. But remember, and I follow the Qs closely. There was absolutely no volume in the NQ, which is the Nasdaq future. No volume whatsoever. After the first hour, contracts per candle, per 3 to 5 minute candle, were 900, 400. So this is nothing more than just a fake move right now. And when I say that lightly because there's no volume supporting it. Okay, so just really use caution out there, guys. All right, guys, well, have a great day. Use your stops. Be careful out there. Anything could trigger a market sell-off at this point in time, okay, because we have nothing supporting below. And then I think if that does happen, risk happens really fast, where I think you might see a 2 to 3 or 5 day sell-off here, okay? All right, have a great day, everybody. Speak to you tomorrow.